Hello traders, Gary Wagner here, just before 10 o'clock in Honolulu, 4 o'clock in New York on Wednesday, 23rd day of March 2016, and this is the daily report for gold and silver. We do have a meltdown in the markets today, precious metals markets that is, with gold trading off approximately $30, yes, $30 on the day at $12.1940. The low today, $12.15, so we're just about $4 off the low. The high on the day has been $12.4950. Of course, we have been sidelined in this market as we looked at a potential top when the market hit 1272. In hindsight, that call turned out to be right on the money as we had a high of 1271.90. In other words, exactly to our target. On today's video report, I want to go over what I'm looking for in terms of where I think we'll find support, what our current strategy is, and when we're looking to actually enter the market. So absolutely no doubt, we have seen the market go into a correction phase since it had hit these highs here at 1282. That was our first set of highs, and the second set of highs came in at about 1272. We're now trading at around 1220. If you recall from yesterday's show, we talked about the fact that we're absolutely in some sort of, whether it's a correction or a consolidation, but we have lower prices than we have had. As long as this market was trading above, call it 1230 to 1226. That is based upon this level of support right here. I felt we could see a flat, we could be seeing consolidation, but we certainly had to watch out for the potential that this market would go into a full-blown correction. Now, considering that we have seen this market move from 1046 up to 1287, some sort of a relief valve is to be expected. We have plotted on this particular chart, very short term, 240 minutes per candle Japanese average, but we have plotted a key level which comes in at around 1200, and that is our 38% retracement. And as you recall from the last couple of weeks, my feeling was that if we didn't hold this line here, meaning about 1230, then we certainly could see this market move to approximately 1200. And traders, that's kind of what I'm looking at this point. My belief in terms of our very short-term count is 1, 2, our protracted and long 3 to 4 to 5, and that completes a sub-count 1 right there. From there, I believe we are now in an A, B, C correction, which should terminate roughly anywhere between 1194 and 1200. So traders, really to put into perspective this current correction to a much larger picture, I am still very bullish overall, but I believe that we're currently in that corrective phase of an upward potential bull rally. And this is what I'm talking about. On the bottom, we have the short-term 240-minute chart. On the top of this screen, we have a weekly chart in which we have our major count, major fifth, conclusion of our major A, under the assumption that we are currently in our B wave, and that's a major B. Now, when we consider this 1 through 5 here, which took us off of these lows at about 1050 up to these highs at 1287 and completed that one represents this one right here. In other words, this move from the recent lows up to 1287. All of that is contained within this particular 1 through 5. Now, we get a top here, and I believe that we are now currently in a wave 2 down. And again, all of this is a sub count because we're going to get 1, 2, 3, 4, 5, and that will give us our intermediate 1. And so traders, to kind of put all of those puzzle pieces together, this is basically what we're looking at. We hit a fifth, and a conclusion of a major A. So there we go into our subcount. The subcount has just completed a 1. We'll go into a subcount 2, which will probably take us to about 1200. Then we go into a subcount 3, 4, and 5. And I believe that 1 through 5 should culminate roughly at about 1450. Also, in terms of this timeline, that's obviously not to scale. I believe that this timeline here could be a year to a multi-year move. This has been Gary Wagner, wishing you as always good trading. Talk to you tomorrow for another daily update and review. Bye-bye.